Welcome everybody to the Naked Forex webinar. My name is Walter Peters, as many of you know. Thomas, you should hear now. You should hear everything okay now, Mike. Okay. My name is Walter Peters, and many of you have read the book I wrote called Naked Forex. I like to trade without indicators, and that's what we're going to be talking about today. We're going to be talking about trading without indicators. And particularly, today's session will be focused on breakout trading. How do we know, if we're not using indicators, that we're going to see a breakout trade? And what are the differences between breakout trades and fake outs? And what can we do when we're looking for breakouts to avoid fake outs? In other words, is there anything about the price action patterns that will tell us when a trade is likely to be a successful breakout or when it's likely to be an unsuccessful, or what I call a fake out trade? If you guys ever have any questions about this, sometimes I have ebooks for the topics that we look at. You can always email me, and I'm happy to help you out. That's what I'm here for. And my email is on this chart here. This is the Canadian dollar 4-hour chart. And there it is. It's walter@fxjake.com. So feel free to email me if you have any questions, okay? And as we go along as well. Tom says no sound at all. Can everyone hear me okay? Boyke says relog in and click yes. Oh, okay. Okay, cool. All right. Just want to make sure that... Yeah, it looks like Tom doesn't have his things plugged in, from what I can tell. Hey, Sanjay. Welcome. Peter is here, and Piotr. Jason. Yeah, okay. So let's get going, folks. All right. So what I want to do is first just talk about the principles that apply. Now, the reason why... Does anyone have a pet chart that you want to talk? You're okay now. Okay, great, Thomas. Does anyone have a chart that you want to look at right now? Like, is there a chart that anyone's sort of trading right now, thinking about trading? Because I'd like to use a chart that's of interest to someone rather than... there are certain charts that I want to look at before we leave tonight because of what's happening right now on the chart. But just as sort of a gold and silver. Okay, let's take a look at gold and silver. Probably not a good example. Let me see if I can find something on a lower time frame. Yeah, okay. All right, this is fine. This is fine. We'll do this one. We'll do gold. All right. So this is the gold 4-hour chart. So we can use this one. Now, what I'm going to do on this gold 4-hour chart, actually, before I do this, I'm actually going to go to my 4-hour charts so I don't mess up my daily charts. I like to have my 4-hour, my daily, and my 1-hour charts all separate. So I will quickly move to my 4-hour charts, and we will be good to go. All right. We will look at the pound as well, Sophie. We will definitely look at the pound. And we will look at the euro and the euro-yen. All right. What I'm going to do here, folks, is I'm just going to go to the daily chart, and I'm going to draw some critical support and resistance levels in. Why am I going to the daily chart? Because we're going to be looking at the 4-hour chart, and I want to make the really obvious levels, support and resistance levels. I'm just looking for the bends in the chart here. And once I get them all posted on this chart, then I'll be ready to roll with the 4-hour chart. It looks like I missed one right here. And that may do it. No. There's also one. Once I do the higher time frame, then I go to the time frame that I'm trading, which in this case, of course, is the 4-hour chart, and I make sure I draw all the rest of them in. Now, the interesting spot on this chart to me, for what we're talking about right now, is right in this area right here. Okay? So, let me show you, and then actually, we have another one down here. Okay. So I've got all my zones drawn in on my gold 4-hour chart. Now, here's what I want to talk about. I want to talk about finding breakouts. One of my favorite patterns is what I call the axe, and it looks exactly like this. You'll notice that this is not only on the gold chart here, but it's on many other charts. In fact, if you go to the Canadian dollar, which is the one I had on earlier, you will see the exact same pattern. In fact, it was even better on the 1 hour. Let me pull it up here. Back here. Well, the 4 hour was okay too, actually. Back here, we had... where was it? Oh, right here. Here's another one right here. And the axe is simply it's the collision of two formations, or two pressures on the market. The first is this trend line right here, where the trend line is squeezing the highs lower and lower up against a really strong horizontal support and resistance level. If you go back on the chart, you'll see that this horizontal level pops up in the past here, where it was support here, resistance there. It became really close to support there. And then what happens in this instance is the market is getting squeezed. Each successive high is lower and lower because it's following the trend line, and it just can't bust through this support level here. And it finally does squeeze it beyond it. Same thing here we have in gold, where the lower highs are getting squeezed against this horizontal level, and what normally happens is what happened in both cases here is that the market breaks out to the side of the horizontal level. It doesn't have to be a bearish one like the two examples here. You will get bullish ones as well. So that would be a rising trend line squeezing up against a resistance level. But this is a downtrend pushing, this trend line pushing it against this horizontal support level right here. And the market changes this horizontal line. Now, you basically have to decide. I actually posted a video about this specific idea on YouTube just a few days ago. And in fact, if you guys are interested, you can find it on YouTube. Just look for my channel, which is the Naked Forex Now channel on YouTube. I just posted a sort of an in-depth analysis of this specific idea that we're going to talk about tonight. That if you wanted to, you could, see how I look at this. This is what I say to people, because I hear this a lot when we talk about this idea of, getting these breakouts. When that happens, a lot of people will say, well, I don't know. I don't know if this counts as a retouch right here, and if we were looking at the line chart, it would be this touch right here. People will say, well, does that count as a retouch, or does that count as a retouch right there? And my answer is, well, it depends on what kind of trader you are. If you trade the 1 hour charts, if you're a trader that trades 1 hour charts, let me go back. Whoops. If you're trading the 1 hour charts and you're trading this axe formation here, then maybe you would consider this part right here, these candles right here, the retouch. So the market finally breaks out here, comes back up, prints these little wicks here. The market can't close above my level at 98.58 on the Canadian dollar, and then it falls away. So my retouch is right there. And I get it on this bearish candle here when the market starts trading lower than my two spiky candles here. And that says, okay, it's broken through. It broke through support here, came back up, retouched it, and fell. That's where I go. Now, if I'm a longer-term trader and I trade daily charts or maybe I trade 4 hour charts or something like that, then maybe what happens is I don't look at this one at all, and instead I look at this retouch right here, where the market fell away, then came back up a little bit later, and then I got in on this move right here. Now, in both cases, the market actually didn't go forever. It actually just made the move down, and then you can see it's back going up, 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 and away. So the market's going back up again. But in either case, there was a chance here to take some profit. Let's go, let's see, this is the pound. Trying to find something here that will give us a nice, don't see it on the 4 hour, let's look at the 1 hour. Here's a great example of this idea that Sanjay and Sanjay and Thomas just mentioned. And so I'm going to show this on the pound because I think it's worth our time here. See this support level right here? Okay, I'm going to get rid of this one upstairs. So we got one at 60.87, and then we have this trend line right here. So we've got an axe formation happening right here. So the market is getting squeezed. The trend line is making these highs lower and squeezing them up against the serious level of support on the pound, right? So if I decided to go with a traditional breakout trade, guess what? I'm going to get fake out. Somewhere in here, I'm going to get suckered into selling. I don't know if it's this candle or this candle or this candle. Support is now going to become resistance. So that's why we do that. So if we're looking at the pound right now, we don't really see any. I don't see anything really brilliant at the moment. Let me look at that 4-hour chart again. The best shot, there are two places where the pound could give us a sell. One would be up here at 62, which is only about 20 pips away from it, and which is where we have support here and resistance there. And the other spot would be up here at 62.43. Those would be the two best spots to look for a trade on the pound. So I think someone wanted. Did Sophie want to see the pound? I think Sophie wanted to see the pound. Yeah. So if I were trading the pound, Sophie, I would be looking for a nice naked trading setup right around here. And if it blew through that level and just kept going further higher, I would be looking for a sell somewhere up. And then it finally fell through. It never really gave me a breakout with a retouch here. It was a fake out and then a breakout. That was a really tricky trade. That was a nasty one. Now, here's another principle I want to talk about, which is successive touches on a zone, on a horizontal zone. And you'll notice I'm always talking about zones. The reason why I do that is because that's where I like to take my trades. I like to take my trades on the places on the chart where the market's reversed over and over again. So here's one right here at 63. Now I know we're not up to 63 just yet, but a couple of weeks ago, and those of you that follow my trades know that I took a trade off these. Okay, it was actually here was the first target, the 61.60, and the second one 61.15. And you can see the market went as low as 61 even. So it did take out that second target. So that trade's over. And it was just a simple sell off this kangaroo tail right here. If you don't have the kangaroo tail book, I know most of you do, but if you don't have the kangaroo tail ebook, you can email me and I will send it to you, fxjake.com. Walter@fxjake.com, and I'll give you the book. Okay. So that's why I've got a bearish bias on Sanjay on the pound right now, is just because of that critical reversal level. Remember, I like to trade where the market's reversed in the past. So that's why I sold it there, because it reversed there in the past. And right now, until the pound shows me otherwise, I say we're in the early stages of a downtrend. That's what I'm looking at. Hey, Dick, what's happening? What's happening? So we will look at your pair, Dick. It's one of my favorite ones. Okay, so it looks like we may actually get a move up here to 62 on the pound, which would be great because I'd love to see about selling this pair there. Okay, so let's go back down to the 4-hour chart and let's talk about breakouts. Now, one of the things that I know when I'm watching my charts is I know that many touches on a zone in quick succession usually tells me that the market's going to fall through. What do I mean by that? Well, here's several touches on the 62.43 level right here. When the market, now this is a little bit different because the market was coming up and it was sort of just resting there. And then it went up again. And it will do that a lot. But this is interesting here because the market came down, it touched it with just 3 candles and then it bounced quickly. Came back down, touched it with another candle, and then it bounced quickly again. That's fairly typical, and you'll see in the line chart, it bounced, came up, bounced again, and then went up. And that's typical of a market that's going to go away from a support and resistance zone. Now this, however, is something totally different, and this gets to the meat of what we're talking about tonight. Remember, when we talk about those axe formations, we're saying that trend line is squeezing the market up against the support and resistance level, and that trend line is forcing the market to repeatedly hit that support or resistance zone over and over and over again until it squeezes out. And let's go back down to our gold chart so you can see this. So here's our trend line here. Here's our horizontal level here. And because the trend line is moving downward, it's hitting this level over and over and over again until finally it squeezes and just falls. Same thing happened on the Canadian dollar. Here we have the market. The 1-hour chart actually looks a little bit better, I think. But yeah, the 1-hour chart looks better on this one. You could trade it from the 4-hour, but this sort of brings home the point, which is the trend line is squeezing the market bounce, 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 breakout, retouch, and fall. And that's a typical pattern. Multiple touches in quick succession equals breakout. Does that make sense when I say that? Does anyone understand does that sound tricky, that idea? Multiple touches in quick succession equals breakout, right? Yeah, Tomas, the ebook is, here it is. It's Walter at FXJake. You can just email me. I'll give it to you. Multiple touches in quick succession equals breakout. If the market touches a zone over and over and over again, it usually means it's going to break out. Will it always 100% fail-proof happen every single time? No. But if the market is touching a level and it's doing it multiple times over and over and over again, it's probably going to break out. And so that's what I mean by the difference in touches. And let me go back to the pound, because here we have a touch, the market quickly moves away, and then it touches again. That's just a double bottom, right? And the line chart will help me. Boom, boom, see you later, okay? Now here, this is a totally different idea, because at this stage I'm saying the market, it looks like it wants to move away here, but it's not. Over and over and over again, the market is it's almost every single 1-hour candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles in a row it's touching, and then finally it does fall through. It's not fail-proof, but that is a typical move. Now when we see what's happened here, down here, this is the opposite. What's I'm out. You get a touch, the market moves away from that level, comes back down, touches again. That's double bottom. And the line chart again is going to show me a touch, moves away, a touch, see you later. That's a double bottom. Boom, boom. But when I see multiple touches in quick succession over and over and over again, that usually equals breakout. Let's look at some of the other pairs that people want to look at, like the euro, and see if we can put this principle into effect. Here it is right here. Here it is right here. Multiple touches. Boom, 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 boom. Finally it broke through. And this is actually an axe formation, because if we draw a trend line here, you can see Now, it depends on where you draw your zone. You probably would draw it right here. That's probably the one that's going to make the most sense. Because it captures all these touches. 1, 2, 3, 4, 5, 6, 7, breakout, and then finally win. Notice that we have not had that touch back down here. So we haven't on this chart, on the 4-hour Euro chart, the market has not come back down here for the retouch. So this is one of those rare cases where we probably would have missed out. If we were looking for a breakout here, we probably would have missed out. What about, let's see what happens on the 1-hour chart here. Yeah, the 1-hour chart, it looks like the 1-hour chart doesn't really give us a retouch either. It could have given us a retouch here, but it fell back in. So that was more like a 1-hour fake out. Fell back in, and then it finally broke out. But let's look at our chart right here and see if we can make sense of this multiple touches thing. See, right now we don't have any multiple touches. We only have 2 candles up here, and we're not really where we want to be anywhere, or where we want to be anyway. We really want to see the market get up to 32.90 around there and wait for a breakout there. That's really the next critical spot on the euro. To the downside, it would be right around here, I would say, which is 31.90. So 32.90, 31.90 on our 1-hour chart. That's really where we want to see what happens. Obviously, this spot down here at 31.50 is also quite critical, where all these lows are. And you might draw it a little bit higher. You may draw a little bit higher around 31.55, 31.60, but somewhere around here. So we basically got 3 critical spots here on the euro. The first is 32.90, the second is 31.90, and the third is 31.50. So if we get a bearish setup here, we could sell it. If we get a bearish setup down here, we could sell it, or a bullish one down here, we could buy it, or a bullish one down here, we could buy it. But again, I would want to see multiple touches in quick succession if I'm trading a breakout. And then I want to wait for that retouch. No, I don't really consider fundamentals here, Boyke, at all. The Black Cat says, yeah, multiple touches means more than 2. That's right, Black Cat, exactly. So let's see if we can find, I think some people want to check out the Euro Yen too. I saw some comments on that. Let's see what the Euro Yen gives us. Okay, we got indicators on here. We want to get rid of them. All right. Let's see here. Wow, we've got a really nice strong uptrend on our 4-hour chart. And you have, this would be basically what you would be looking at here is a failed axe, because the market was squeezed here against this horizontal level, multiple touches, but it never broke out to the downside. So that's an example of a failed one, basically. But if you look, what I'd be looking for and to answer your question, Black Cat, which is, it's a brilliant question. I think it was you, Black Cat, that said, if you don't get a retouch, does that mean we're in a strong trend? Yeah, it could mean that. It could mean that. It could mean that, yeah. I prefer to wait for the retouch, because you're normally going to get the retouch. It can happen, and it does happen where you don't, but they happen. The retouch enables me to avoid losing trades. I'm still going to have losing trades, but I miss out on a lot of them because I don't get on those fake outs. Now I'm also going to miss the very best ones that go without the retouch, but that's a small price to pay. That's a small price to pay. Really it is. So here, what we have here is it's a strong uptrend. Let me look at the 1 hour, actually. What I want to do, actually, you know what I want to do on this pair? Because I want to draw in some zones based on the daily chart, so I know where we're at. Whoa! So I know where we're at in terms of levels that we need to look out for. So we've got one right about here, actually. I hit it. Right about here. And then we've also got one up here. That's a great one. And then we've got one right here.
I'm just looking for the bends in the chart here. That's all I'm doing. I'm just posting up the bends in the chart. And what I want to do here is just identify where might we run into some trouble right now. And there's going to be one in this area too. Right there. And let's see where we're at. Looks like we're up against 114. Yeah, 114.10 is our next area. So if we zoom in here on the 1 hour euro yen, the 114 level is really the spot to go. Is really where we would look for some nice touches. Let me go ahead and put in my period separator so I can see where the days start. Yeah. So essentially, I would, yeah, black cat. The ones with multiple bends. The ones with multiple bends are the place to be, exactly. So I'm looking at this chart, and I'm saying, if it gets to 114 and bangs its head up there several times, I might be looking for a breakout there. That's what I would be doing. Yep, that's what I'd be doing. Alternatively, if the market comes down and bounces off 113, I might be looking for a buy as well on the Euro-Yen 1 hour chart. Yep, that's right. Now, okay, Mehmet, see ya. I don't consider fundamentals, Boyke. I want to, before I don't want to run out of time here, guys. We have a great chart on the pound Aussie. Does everyone see why this is so great? This is exactly what we've been talking about all night. And I didn't want to leave here without giving you what I see as an excellent possibility. And that is what we've been talking about, this axe formation. This is the pound Aussie 4 hour chart. We have a trend line pushing the market higher, making higher lows, and we are up against this brilliant level right here of multiple touches. Boom, boom, boom. Look at all these touches we've had recently. Even if we go to the 1 hour chart, you see the same thing. Trend line holds the lows. Now, I might have to adjust it slightly for the 1 hour chart and do something like that. But the main point here is the same, which is multiple touches, boom, 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 in quick succession usually means breakout. So that's a buy, exactly, Black Hat. This is what I would consider to be a textbook A-grade touch and go on the 1 hour or the 4 hour or even the daily, if you wanted to, pound Aussie chart. Now look at this daily level. Look at how this pair has respected this level in the past. We got a double bottom there and then a breakout. We got a touch and then it fell. What happened after the market touched here? It fell, I don't know, 282 pips. Is that right? Yep, 282 pips. And then we got a touch there and a breakout. And then we came back down, we touched, we broke through, we retouched on the way down. So here's an example of what I'm talking about. The market comes down here and it breaks through, came back up to retouch it, and then it fell away. In fact, it retouched it twice. Once there and once there, and it fell away. How far did it fall away after the retouch? It looks like it fell about 300 pips. Now we're back up here, and if we look at our 4 hour or our 1 hour chart, we have a brilliant looking setup for a axe breakout. Black Hat says, when you look at the pound Aussie, do you look at the direction of the pound and the Aussie? No. I treat them separately, but obviously it would probably mean that the pound dollar is going up and the Aussie dollar is going down. The Aussie dollar is in one of the strongest downtrends at the moment. So let's look at the Aussie. Where might I decide to sell the Aussie if I wanted to? Well, first of all, I'd say it's a little bit scary because of that big bullish candle that just printed on the 4 hour chart. But some of the places where I would look for this pair to fall away from would be right around here at 104, would be a great spot, or right here at 104.40, or right here. Let me go to the line chart because this looks a little sloppy to me. I always go with the line chart when it's hard to tell, and I would say it looks like 104.60. So now, what about if I'm a fib fanatic? If I'm a fib fanatic, I could go, okay, I'll draw my fibs here and say, look at that, magic. The 50% retracement is right about where my 104.60 level is, and the 38.2% retracement is where my 104.40 level is, and my 104 level is at my 23.6 retracement. And and to boot, the 61.8 is actually on the next support and resistance level, and that just happens to be even the 78.6 level right here is where the market was held here before it fell. And guess what happened up here? This was another axe. This was another axe. Does everyone see that? This was another axe. Boing, boing, boing. Squeezed multiple touches in quick succession, the market fell. I'm going to get rid of the fib grid because it's just too messy. But if I look at this chart here, here's my axe. Trend line squeezing it up against. Boing, 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 boing. Breaks through, came back up, retouched, and fell. That's textbook. That is an absolute textbook breakout with retouch right there. It doesn't matter if I'm trading on the 1 hour or the 4 hour, I still get that retouch. Now, if I'm trading the daily, I never. Let's see. Yeah, if I'm trading the daily, I never get the retouch. It never happens. But if I'm trading the 4 hours, clearly I get it. If I'm trading the 1 hour, I get it right there, same spot right there. It would really be this candle right here because that's the first bearish candle that falls away, and that's where the bend in the line comes. It comes right there. You can see it right there. That's what it would look like on the line chart. Line charts can help really clear things up for folks. If you don't use the line charts, and a lot of people don't, it could really clear things up for you. Yeah, it's brilliant. Yep. I believe that we're probably just about out of time, folks. I don't want to go over time. I want to be respectful. So if there aren't any last-minute questions, yeah, we will have webinars on targets, Black Cat. We can use multiple types of trailing exits. We can use the next support and resistance level. Yeah, absolutely. This next support and resistance level is one simple way to do it. Yep. And it's a great way, too. Yep. So let's say, for example, on the Aussie dollar 4-hour chart, that the market comes up. I'm going to get rid of this trend line here. Let's say, for the sake of argument, the market comes to right here, and it prints a bearish candle at 104.40. Well, guess what? If the market prints a bearish candle at 104.40, my targets are going to be 104, obviously, and then right here at 103.80, and then down here at 103.50 or 103.60 right there. So if it comes up there and prints a bearish candle and falls away, those are going to be my targets, right? Yeah, exactly. Well, my stop's going to be on the other side of the bearish candle. Let's say the market comes up here, it prints a candle that's about as big as this candle right here. So it's a 30-pip candle. So I'll have a 30-pip stop up here, something like a bearish candle that's about like this right here. I'll have a stop above the candle right there, and then I'll target down here, 40 pips away. And then I'll have another target down here, 50 pips away, 55 pips away. If it comes up here, and when I say bearish candle, I mean a candle like this where the close is down near the low, or like this candle, not a candle like this. That's not a bearish candle, that little tiny one. It needs to be a big one like this, and it needs to have a close down near the low, like all of these candles here. Yeah. So the Aussie would be my favorite pair to trade because it's just in a nice trend right now. Obviously, the yen, all those yen pairs are also in really strong trends, like the Euro yen, Singapore yen, all of those as well. If they give us a nice pullback, it would be great to go in on those as well. So lots of easy pickings here on our yen charts. I got these weird, funky indicators. That was for another webinar. Yeah. All right, guys. I appreciate spending your time here. I hope you have a wonderful 2013, and we'll see you next year. Thanks. Hey, Han, I didn't see you here, buddy. Thanks, Han. I definitely do use indicators, but it's quite rare, and it's more for testing purposes. Yeah. Have a great New Year, Dick. See you, Black Cat. See you, Boyke. Thanks, Chuck. Thank you very much, FX Street. Thanks, Adinda. If it is Adinda. Thank you. See you, Thomas. Bye, Sophie. Take care, everybody. Have a great one. See you next year. Bye.